Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and let's talk about the real estate market. CII NROC report on the housing market highlights some very crucial trends of the residential housing market. Mid-segment houses, which is almost from 40 lakhs to 80 lakhs, dominate the new supply with almost 36% of the share, and this is followed by a premium category, which is 80 lakh to 1 crore, and affordable category, which is less than 40 lakh, holds up to 18% of the share. What does this mean for the entire market, and how is the festive season looking up? Let's decode all of this with Prashant Thakur, Regional Director and Head of Research, NROC. Prashant, good evening and welcome to the show. So I would just request you to break down the survey. The highlights that I just stated were very few. What kind of price segments are we talking about where the share is in chunk, and also what areas, what kind of towns are we talking about here?
Hi, Kavita. So, in fact, before I break down the data for you, let me answer the question about how the demand has shaped up and how we're looking at the upcoming festive season. See, to everybody's surprise, the recovery post-COVID has been pretty strong. In fact, in the year 2022, we sold close to 3.6 lakhs units across top 7 cities, which actually surpassed the previous peak of 2014 by 6%. And it was 40% higher than the pre-pandemic year of 2019. There are a couple of reasons. Affordability still remains to be quite good in spite of back-to-back interest rate hikes. The reason is that the price discipline that the developers have kept is kind of remarkable. They haven't passed on the entire input cost rise that they have seen to the buyers. And then, luckily, it has been a very strong momentum driven by end users. But what also we have seen that the lower segment, which is affordable, which is 40 lakhs and above, has seen a decline. And what we have seen is that the premium housing, or let's say upper budget segment, has picked up, as you rightly pointed out from a survey. There are a couple of reasons why the affordable segment has taken a beating. Is number one, because of input cost increase. The cost escalation for this segment has been pretty steep, because most of the buyers of affordable segments, they come from unorganized sector, or they might be working with SMEs and MSEs, and they're yet reeling under the pressure of post-COVID effects. Their income has still not come back to pre-pandemic level. While this is not the case in the upper segment, where people are going out and buying, and post-pandemic they have realized that physical asset is quite important. A strong stock market performance has also helped this segment, upper segment, which has come out and bought the properties. A lot of upgrades have happened. Now, coming back to which part of the country is seeing strong demand. So I think MMR remains to be the strongest geography performing, followed by Bangalore and Pune. We are seeing strong demand and strong interest coming from tier 2 cities like Ahmedabad and Lucknow, Kochi, Jaipur. Because post-pandemic, what has happened is that most of the commercial offices, most of the companies are also looking at tier 2 and tier 3 as a possible destination for them, thus creating creating a kind of employment hub over there. So this is what it is happening. And this demand, this comeback, or let's say this recovery in real estate, this time is pretty different what we saw post global financial crisis. This I would say recovery is based on a solid fundamental. Post RERA, we have a very strong and disciplined market. This is end user driven market, not investor and speculator, and that's the reason I think we are expecting for a continued momentum in the sales demand. However, this upcoming festive seasons would be a testing ground. If the momentum and demand continues, I think we can say that yes, we are in a long-term upward cycle.
Exactly, this festive season could be like the crucial period to understand the nature of this demand. But then having said that, Prashant, earlier post-pandemic, when we had just come out of the pandemic, a lot was talked about the pent-up demand. Now we are seeing inflation is a concern, and rising interest rate obviously is pinching, the pockets of people out there. But what's the nature of this demand? Are you looking at it as a need-based demand? Are you looking at it still being a pent-up demand? Obviously in the festive season, because last year we saw, there was a bumper demand across the categories, and in fact even luxury market was doing well. What is the nature of this demand that you're able to understand?
See, first we need to understand that India is primarily a housing deficit country. The reason we saw a slump, a prolonged slump, for a decade till the recovery we saw post COVID was because of various different reasons. There was no regulator, lot of fraudulent players were there, completions were not happening, a lot of projects were being abandoned. Now, if you see today in today's scenario, we have a very strong regulator in form of RERA. Most of the launches are being done by grade A developers. I think RERA is pretty harsh on timelines, so there's a huge penalty. And now the buyers are seeing actual completion and handover happening. So that has kind of led to a renewed confidence in the market. And it's kind of, as I said earlier, that it's an end user driven market, that it's a need based driven market, not investment driven market right now. And if you look at the interest rate, though it has inched up quite steeply, it is still well below what we used to see. There were days when the interest rates were in the range of 14 to 16%. And having said that, the income levels have also gone up. And one interesting phenomena that we are seeing is that the average age of home buyers have come down. Millennials are stepping out and buying because they get a prolonged period for, repaying their home loans. So I would say that this recovery is based on solid fundamental, clean players are in the market, deliveries are happening, buyers have evolved, and it's more of a need-based market where developers are kind of listing. So, in a nutshell, I would say it's kind of right now a buyer-driven market right now.
All right, can we also have the name of the cities that we are looking, the demand going up actually, or anything unusual, even the trend over there that you've noticed?
No, see, to be, the data that we released through a CII survey was more focused around top 7 cities that we track, metros. So if I have to break it down, I think 40% of the sales in terms of value is coming from MMR region, followed by NCR, then Bangalore and Pune. Hyderabad is kind of in a market which has come back very strongly, but Chennai and Kolkata still remains, bit kind of slow as of now. They're yet to kind of catch up in terms of the kind of phenomena in growth that you have seen in other countries. And in tier 2 cities, I would say Ahmedabad has picked up quite significantly. Lucknow is a city where a lot of action we are seeing because it's more of a, lot of I would say government employees are coming out and buying, they're upgrading. I would say the acceptance of township living, gated community living experience is also kind of catching up in these cities. Then we have seen strong demand in Kochi, Jaipur, Bhubaneswar. And if you have to look at the reasons behind it, as I said earlier, that a lot of commercial activities are started to take shape in terms of a lot of IT and ITS companies moving near to their talent pools. So it's kind of a thumb rule. Wherever employment opportunity is generated, the residential development follows. And that's what we are seeing in tier 2 cities.
All right, let's see how the trend continues during the festive season. Thank you so much, Prashant, for being on the show and helping our viewers with this.
Thanks.
On that note, let's take a quick break, but then post that, we will talk about your financial portfolio queries, and we will also decode the trend of passive investment that's catching up with our special guest on the show. See you after the break.